Hey, what's up, everybody? I am Jason, and you're watching my channel, Micro Investor, the channel where I pretty much talk about whatever I want to talk about investing wise. Anyways, so I just saw this video. Jeremy at the Financial Education Channel, he was talking about something he didn't agree with Jim Cramer. Jim Cramer said people should be thinking about, buying into, Clorox, PepsiCo, Coca-Cola, see if stocks like that. And Jeremy is disagreeing with those. This isn't a video to try to say anything bad about Jim Cramer or Jeremy, because I respect both of them and I listen to both those guys, okay? So I admire both of them, so I don't want anybody to take this the wrong way. But there's a reason why Jim Cramer makes that claim, and I kind of want to go through with everybody why that's said, and why people also say, don't buy a single stock, buy a fund or something like that, because there's a lot of different types of investing, and it's where you want to take that risk. Obviously, if you're someone that wants to take a risk, you're not going to go, you're not necessarily going to think, oh, Clorox might be a good idea, or, Coca-Cola, something like that might not be a good idea. If you're someone that wants to take a risk and try to go for that huge reward, more risk can equal more reward type thing sometimes. So, but that's not always true too. So I want to just talk about that. So for me, when I invest, all right, so I take a certain amount of my portfolio and I decide about how much of that I want to make risk, okay? And then I think about which ones that I want to be conservative with. I want to keep there. And then there's also like different taxable accounts that I use. And I think about what I want to put into these like non-taxable accounts, like my Roth IRA that I have. What do I want to contribute to something like that? So I'm very broad with my investing. I don't just, if I'm going to do single stocks, there's going to be ones that I'm going to pick that are risky, and there's going to be ones that I'm going to pick that are not. They're very conservative. And there's also going to be funds that I choose that will also be very conservative, that also possibly outperform the market. And that's kind of like where I would go with it. I always check the performance of everything I buy, and there's a reason why Jim Cramer made those claims with Clorox, Pepsi, and Coca-Cola. If you follow my channel, and if not, I would like it if you would subscribe. But if you follow my channel, you would know that I made a video recently where I talked about stocks that I'm up in. Now, in that video, there's a few stocks that I've taken risk in that are up, and then there's a good amount of conservative stocks. I'm talking about stocks like Pepsi and stuff like that I did do well in. All right. And so just to get to an actual breakdown of why he would say Clorox is, I want to show you that. If you've had Clorox for the last year, okay, you would have made about 8.7% return in growth of that stock, on top of a dividend of 2.66. Okay, so we're talking about about 11% return on your investment with Clorox. Now, if we go to Pepsi, all right, now you would have lost a little bit of money with Pepsi, but then the dividend would be 2.6%, which would kind of balance that out to zero. So you wouldn't really lose much with Pepsi, but you wouldn't really have any rewards with Pepsi, and that's fine. And then we go to Coca-Cola, and Coca-Cola, you would have made an 8% return on just the price of the stock, and a dividend of 3.23%, and which would equal out to a return of 11% on Coca-Cola. Now, I understand the forward PE on these stocks, and I understand that these stocks have a lot of debt. That's because these companies do make really large purchases on buying other companies. Clorox, Pepsi, and Coca-Cola have all done that. They've all made really large billion-dollar purchases in other companies. And so you're not going to get like that awesome PE that you would expect, because they're spending so much money. And it doesn't matter what the evolution is on how much like people are drinking in soda. Pepsi owns so much that they aren't necessarily a soda brand. You know, they're in the business of Quaker Oats. They own Quaker Oats. They own Frito-Lay. You know, they're a chip company. They're the world's largest chip company. They're the world's largest oatmeal company. You know, they're not just soda. And Coca-Cola is a massive coffee company. They're not just Coca-Cola. And they have so many other brands as well. So these companies have made very large purchases. They have, which they pay a lot with debt, but they know how to run their business. They've been around forever. So there are purposes to actually buy stocks like those. They are very safe investments. And also, regardless of what Jim Cramer or Jeremy with Financial Education or any other YouTuber or anybody would really say about what you should and shouldn't buy into, everything should be at your own education into what you want to invest into. Don't just buy something because somebody else tells you to or somebody else tells you not to. Always make your own opinion on what you want to do with that. So for like Coca-Cola or Clorox, for example, if you were to buy into any one of those, there's a lot of tech stocks that a lot of people would say you should buy those, that we're also saying you should buy those last year, right? And if you would have bought those tech stocks last year, you would have lost a lot of money. Now, for me, I don't have large holdings of like Coca-Cola, but in percentage-wise, my Coca-Cola stock did better than a lot of my tech stocks. I've even barely up in Tesla now than I was just a while ago, because Tesla's, you know, it dipped again. But, you know, my holdings of Coca-Cola have, you know, not been too volatile. The stock's been a lot safer than a lot of other things. And so, like, even Apple, for example, yes, I would be absolutely bullish on buying Apple right now. I would buy as much Apple as I can at this moment. That's me as an investor saying that, but I also wouldn't say I shouldn't keep buying Coca-Cola and averaging in at different prices for Coca-Cola, because I know Coca-Cola is going to still perform well, because Coca-Cola has always had a history of performing well. Coca-Cola is not at any risk of going bankrupt. Coca-Cola is going to keep buying other companies and keep being competitive in this industry. So, one of the points I'm trying to get across this video also is just do your research. Like I just did, I gave you some actual facts on how much money people are making with Clorox and with Pepsi and Coca-Cola. And so for that, I just want to recommend everybody to do their own investigation and to invest in their own way. Because we all, like everybody on YouTube that is talking about, you know, stock market and other financial advice, we're all speaking from like our own opinions a lot of the times, and I don't want people to think that, like, so for like me in general, that I'm telling you what to do. I try to do my best at providing the research, doing the math and everything, and breaking it down in a way that it actually makes sense. For me in investing, I don't always just go off of what the PE says, because there can be any reason why that could be at that certain amount. Because I do a lot of stocks that wouldn't make sense to people, like Wingstop. I buy Wingstop. It doesn't make sense to other people, but it makes sense to me. There's a reason why I buy that. There's a reason why I buy Tesla. So anyways, I'm going to leave it there. Please give this video a thumbs up if you like it. And of course, like, share, comment, and subscribe like I always say. I'll see you guys in the next video.